But revenue is derived from the sales of goods, and that is it. When a private sector, when there is no transaction, that means there is no revenue, and they can only derive their revenue from the sales of goods. Then the next one is cost of assets are written off in a year, whereas the cost of assets are spread over the useful life of the asset. Here, there is what we call capital expenditure is classified as expenses, and that is what you have to take note when you are preparing government accounting. There is no provision for depreciation at all, because anything that has to do with capital expenditure is written off as expenses. So that is the reason why. But in the private sector, the cost of asset is spread over the useful life. That means they make provision for depreciation. They depreciate the asset so as to know the economic, based on the economic useful life of that asset. So any capital expenditure is written off in government accounting. Then they report to the general public, and because it is the duty, responsibility of government to give accountability to how they have disbursed government revenue by spending them, how they do go about their spending to the general public, because it is the general public that they that is their duty to report to at the end of the day. Then the private sector, they report to shareholders, because shareholders are the owners of the company, and their decision they bank on the management. So anything that the manager will do, management will do, they do it to favor the shareholder. So they give accountability to the shareholder. Then public sector is based on constitution of a country. Like we all know that the action of the government is subjected to constitution. The way government disburse the expenditure is being monitored by the constitution and the law enforcer. So enforcement. So government cannot just disburse funds like that. They have to be under the constitution, which we direct them on how to spend those expenditure. Then it is that of private sector. It is governed by company and allied commission, which is the KAMA. That is another thing. It is governed by a company. That means a KAMA, because every private sector, every company is regulated by the KAMA Act. So they regulate the activities of company. Then the last one, but not the least, it is basically on cash basis. Like I've said the other time, that the treatment of items on the side of public sector, it is done on the cash basis, whereas that of public sector is done on the accrual basis. So that are the differences between the government sector and the private sector. Then we're talking about how the government disburse the expenditure, how they go about their spending. Then, but this money that they do disburse, where did they source it? They take it out from the revenue. So let's see sources of government revenue, where the government generates revenue in order to disburse the expenditure and distribute it to the public. The first one is direct tax and indirect tax. That is the sources of government revenue. The direct tax is the pay, like I've said, that companies are imposed by the tax authority to pay tax to the government, to remit their tax to the government as at when due. And also, as salary workers, every citizen is imposed by the government to pay their tax. Then the next one is mining. Mining in terms of mining of mineral resources like crude oil, gold, minerals, agriculture, and any other thing. So government gets source of revenue from mining. Then we also have fees and license. I mean, motor license, any people that wants to register with the local government. So the government get fund. They also get revenue from that. Then rent of government properties. There are some properties that is being owned by the government, whereby you rent it to the public. So there is another source of government. It is also another source of government revenue. Then we have a tax we have a special grant. That means special grant within the country or from the other country to aid the government. Then fines also can also, it's also another source of income. Then we have the revenue from armed force equipment. They sell arms like ammunition, like guns and all other things. Where the government gets revenue from there in. Then let's talk about the classification of government revenue. As we all know that government has a revenue, it is also classified into two, which we lay emphasis on. We have only two government revenue, which is the revenue received. Now, what is the revenue received? This is the total amount of revenue collected by the government of the country from regular source of revenue, e.g., fees, license, income, tax. So we talk about the source of revenue. They are classified as it has been stated here. There are many sources. I just only mentioned few items. So you can classify them under the revenue or capital receipt, of which is being done here. We have license fees and tax. That is can be classified under revenue receipt. Then we have the capital receipt. These are the total revenue received from proceeds of sale of assets and loans tied to a project. And there we see sales of government assets. Then loans also from institutions tied to the project. When government want to embark on the capital project, they source for long-time loan. So that loan is a revenue to government, of which it is classified under capital receipt. Then sales of assets, when there are some things that the government want to sell in order to generate revenue, you can sell government building, government cars in order to generate revenue. So that are the classification of revenue. Then let's quickly go to government expenditure. And don't forget, you might be asking the question, revenue. They might ask you, they might give you a question on that. What if that you classify those items under receipt and revenue, of which figure will be given, and you balance it at the end of the day. Then government expenditure is classified under capital expenditure and the recurrent expenditure. Expenditure, you can call it government spending, or the amount spent by the government during the year. So capital expenditure, these are expenditure incurred on long-term projects. They are used to acquire assets that are of permanent nature, e.g. building of classroom, purchases of refuse. The next one, we have the recurrent expenditure. These are expenses used for day-to-day running of the activity of government. I mean, when we're talking about it is some expenses that they are on a short-time basis. Why am I talking about short-time basis? That they are the expenses that are used to run the activity of the government, like a payment of government salary, repair of government cars, purchase of drugs, maintenance of vehicle, and the stationery. As government is doing their day-to-day activities, they need some expenses in order to help them to function in their activities. So with the help of the recurrent expenditure, they could be able to meet up with their day-to-day running of the activity of the government. Then we'll now go to fund. Fund is defined as a separate physical and accounting entity in which resources are held, governed by special regulation, separated from other funds and established for a specific purpose. And that is a vital area that we have to look to. What are the funds? You can call it a post, a government post, whereby they source a specific project. There are some different type of funds. When we talk about funds that government, it is a accounting something that is being separated by the government to finance a specific purpose. Like a capital project, it is a fund that they can use to fund it. So it is being created if government want to embark on the capital project, then there is a particular fund separated to cater for only the capital project. And if it is also, if it's to meet up with government expenses, there are also some funds that will cater for that expenses. That's what brings us to types of fund. We have 4 types of fund. We have a federation account fund, we have a consolidated fund, we have development fund, we have contingency funds. Now, let's first take consolidated fund. What is a consolidated fund? This is the fund which shows the total income derived by the government from all sources of revenue. We can also call consolidated fund as the federal government fund. It is a kind of fund that has been set up to cater for the people that are working under, like a politician, like judges, like law enforcers, which are police, then other people that are working with federal government. You can call it a federal government fund. So it is the fund that is used to cater for a specific purpose. Then we also have a federation account fund. So when we talk about federation account fund, it is a distribution of fund account which is set up by the constitution of a country. Federation account fund it is a kind of federation account that is being set up to distribute funds to the 3 tiers of government, which is the federal government and the state government and the local government. So the fund, the income into that federation fund, it is divided into 3 and distributed to the 3 tiers